Well, on our side, things are actually running very much according to plan. As late as October 2020, we earmarked some ambitions for 2025. Now, with the outlook we've provided for 2025, we tick the boxes on all these ambition numbers. And also on the actuals, we have been doing extremely well. Revenues have been growing fast. You've seen us reaching now double-digit consolidated revenue growth, and that is driven by really high cloud ERP suite growth numbers, 34%, 12 quarters in a row above 30%, which is strong evidence for market share gains in that space. And what is even better, the forward-looking indicators for revenues, which are CCB, the current cloud backlog, so the 12-month ahead contractually committed subscription revenues have been increasing by 29%. And the TCB, so the total cloud backlog, has even increased by 40%. So we have all reasons to be optimistic on executing on these targets.
Dominik, let me ask you about cheaper, faster Chinese tech, because when we were talking to Christian Klein, your CEO, last week, we were talking about how advanced your company is in AI. We know that AI has been a trigger for more cloud adoption, but now we've heard from the Chinese that DeepSeek, that these large language models can be developed very quickly and on a much lower capex budget than what we're seeing, say, out of the United States and possibly even here in Europe. What do you think the implications are for your industry?
I think that's very good news for us, SAP, because we really try to be agnostic of the foundation model we plug into our solutions. What we focus on is really leveraging the context of the customer problems we want to solve. How can we make them more productive? It's about the data, connecting the data to these foundation models. And we try to partition the software solution in the way that if innovation comes, we can quickly capitalize on it and basically upgrade our system. So the more supply, the more choice we can use on our AI hub, the better for us, actually. So I'm not concerned about that. To the contrary, competition, innovation on that front is extremely helpful for creating better products for our customers.
Dominik, in terms of creating better products, does this mean you would be interested in creating a large language model using open source technology that DeepSeek has created?
Well, our AI requirements are threefold. It has to be relevant. I mentioned we have to solve a real problem where customers in a B2B space can make money. It has to be reliable. That's very much secured by the data gravity within the system. In our database, every transaction leaves a trace, and we have no hallucinations because we work with real hard data and the context around it. And last but not least, we have the responsible aspect. So we need to care about the integrity of the data, that we respect all the compliance requirements in all regions of the world. So that's something that's also flowing into the mix. And if these three boxes are ticked, yes, we can use these models.
Dominik, I hate to be a pedant and going into accountancy, which is going to turn our viewers to sleep. But if we're looking at IFRS versus non-IFRS as well, there is a difference in your margins. One's going up, the other's going down as well. Which leads me in a very elongated, wordy way of asking you, are margins stable?
Well, our margins are actually going up if you depollute for the huge restructuring program we have actually been going through. So more than a 3 billion euro ticket. I mean, this is one of the examples where you see that regulation in Europe is making our life a little bit more challenging. So if we have to kind of change the workforce, reduce certain positions in some area to reinvest in future topics like AI and data management, all the topics that we care about. Of course, there is some friction because you have to pay severance, and that severance in Europe is frankly much higher than elsewhere. But this program is now largely completed. And if you depollute for that, you see that actually the underlying margins have increased. And if you then roll the film forward into 2025, you see that the margins are expanding further. And with the indications we gave on how expenses will grow in relationship to the revenue growth, we think the margin expansion is not finished in 25, but will continue.